Turning now to a very specific company, hospital chain HCA is said to seek as much as $30 a share in an IPO. Now, a person familiar with the plan, says the company is expected to start marketing shares next week. Bloomberg's deals reporter Cristina Alesci joins us now with more. Cristina, good to see you.
Nice to see you too.
So is this a big deal, or was this in the works? Did we expect this to happen?
Yeah, we kind of expected this to happen. So the company last year basically essentially paid a huge dividend to its owners, KKR, Bain, and Bank of America. And then subsequently, or actually maybe before that, it had filed a registration statement. So we were expecting this. What we did not know is essentially how much per share, they were seeking. So now we have a range. More importantly, private equity investors are really watching to see. HCA was one of the biggest leverage buyouts ever done. So private equity investors are now looking to those large transactions to see if they can get any money back from those deals. And this is going to be an example of one of them. The other example is Kinder Morgan.
Is this sort of a high water mark or sort of a benchmark for a series of deals that are in the healthcare or hospital sector, or just it's more in terms of sheer magnitude of the size of the leverage buyout?
Yeah, with this deal, I mean, that's an excellent question, but with this deal, it's really about the amount of leverage that was put on this company and its ability to be sold back into the public market, because it was a public company, it was taken private, and now it's re-entering public hands once again. So it's really the ability of these highly leveraged companies to go out into the market and be sold to public investors once. It's essentially the appetite that the public investors have for highly levered companies. And this is a case where, initially, according to our reporting anyway, it seems that public investors will be interested in buying this.
Because this is a deal that this is a company that couldn't have gone public probably a year ago.
Right.
There wasn't enough appetite out there to take on a company with this much leverage on its balance sheet at the time. So does this end up being a good deal for, it was TPG?
This was KKR, Bain, and Bank of America. This seems like it could be a really good deal for them. I mean, if it does price within the range, people close to the company are telling us it means about a 3 times profit on the sponsor's original money. So yeah, to your point, it is a very good rate of return. More importantly, the sponsors here, KKR and Bain, specifically KKR, is going out to look for fresh capital for one of its newest buyout funds. And one of the greatest measures that their investors will look to are distributions. How much cash have I gotten on the last fund? And if I haven't gotten any, well, I'm not going to give you more money for the new fund. I'm going to wait to see how much money I get back on the last investment that I gave you.
Obviously, probably feeling pretty good about 3 times the original investment, or 3 times profit. All right, thanks so much, Cristina. Always good to have you. That was Bloomberg's Cristina Alesci.